wealthy.
Diversification is a hedge against risk if you don't know what you're doing.
Love that.
Yeah.
That's a fantastic quote. We were just talking in the gym again about Warren Buffett's quote about diversification. And I think this hits...
Charlie Munger's quote.
Yes.
Yeah.
Sorry. So this hits home so hard. Like, I understand diversification, but Clark said it best when we were talking. It's like, diversification is a strategy to kind of like shelter your money. It's not a strategy to get wealthy.
Yeah, diversification is a hedge against risk if you don't know what you're doing.
Love that.
Yeah.
That's a fantastic quote. Now, what Warren Buffett and Charlie Munger were explaining is you really should be good at 1 to 3 things, right? You should really have a specialty in whether it's your local real estate market, whether it's starting a business, something that you're good at, whatever. Those 1 to 3 things that you specialize in are going to be how you get wealthy.
Well, even Charlie Munger, what did he say in that talk? Now, that wasn't his quote that I just mentioned. That's kind of like a hybrid of my own quote, and who knows who else's. But what he did mention is that 90 something along, don't quote me or whatever. I don't know if people want to fact check it or whatever. But I don't follow these guys, so I don't know the exact number. But he mentions something along the lines of 90% of Berkshire Hathaway's holdings are within 3 companies: Coca-Cola, Costco, and Apple.
Yes,
something
I heard
along
that.
those lines.
Yeah, we were playing the clip there, and that's what they said.
Exactly.
90-something%.
A stupid amount of money within those 3 businesses.
Yes.
So is that diversified across 3? I mean, you could argue that it might be because they're different industries, this and that, but there's not a lot of diversification there.
Now, if you go talk to a fund manager or your middle class average person, they're going to say, no, you need to split that up into 100 different companies. The problem is, diversification often equals diversification.
Yeah.
So you're taking... You have 3 amazing companies, some of the best companies in the world, and you're taking some of the money out of those and you're putting it into companies that aren't as good.
Yeah.
Just straight up. They're not. How many companies are outperforming Costco and Coca-Cola right now?
And I think a lot of people try to do that because they think they're going to hit a home run doing it.
I don't know about that.
You don't think so?
I
don't know. I hear a lot.
I think people are doing that because they're afraid.
I agree. Because they don't know what they're doing in the stock market, right? It's a hedge against risk when you don't know what you're doing. But I think a lot of people too, they try to do they try to hit the gold rush before the gold rush hits. Do you know what I'm saying? Like the weed stocks or the Bitcoin shit. Like everybody's trying to find that new thing to pop off so that they can just get rich in the stock market.
The middle class doesn't do that. The middle class is putting into diversified ETFs.
Well, I don't know. These are people that fair enough.
The middle class. Now you have some outliers like, I'm going to put $1,000.
That's what I mean. Yeah.
But like my parents, if you were to say, let's invest in like these crazy things, you might get rich. They're like, no, I want my 5 to 7%. I want a diversified portfolio of ETFs. I don't want to lose money. It's not even that they want to make money. They just want to not lose money.
Yeah, they don't want to lose money.
They just want to keep up.
But they're playing defense all the time.
100%. Now, what they don't realize is even if their portfolio increases at 7%, you're only keeping pace with inflation. That's why you never get ahead.
Yeah, you're never going to win a game if you're only ever trying to stop goals.
Yes.
Exactly. You can't. Like you have to score goals to win games.
So what you're going to have to do is you're going to have to work until you die. Now, what this guy said here was, I'm going to increase my income. Okay, that's great. How long are you going to have to work for with that increased income to keep up with the pace of inflation and whatnot? And like we said as well, the beautiful thing about real estate is that it can be passively managed like relatively easily. How often do you go to your properties, Dan?
Yeah, I don't even know where the majority of them are anymore.
Right.
Like I actually don't. Like to be honest with you, I have to be honest. Probably the last 25% of the properties, unless they were really big purchases, I didn't even go to. I give me the information. I want to know, where they are. I'll kind of I know the area enough to know whether or not it'll be a good buy. And I trust the people that I work with to be able to do it. It's very passive. Even my local shit here is very passive. And I had to build it that way because it's the only way to scale.
Yes. And I love this because he says, you have to buy 1,000 properties across 100 cities, whatever his quote is.
Yeah.
That's for somebody that doesn't know what they're doing.
Exactly.
That's for somebody that doesn't know any of the markets they're investing in.
It's a hedge against risk.
So instead of like learning 1 to 3 markets and then going hyper local and picking winners, I'm just gonna blast across 1,000 cities or whatever he said.
And who the fuck even does that?
Nobody.
I've never even who BlackRock.
It's not even realistic.
You know what I mean? But at the end of the day, you can easily diversify your real estate holdings in the same location anyways, across different types of asset classes.
So true.
Industrial, which is exactly what I did. You can, and what what's an even better strategy is diversifying depending on what the market cycle is doing, because there's different assets that you want to, or not even assets, there's different strategies that you want to employ during different cycles in the real estate market, right? So for example, right now, it's very volatile out there. People don't really know what's going on. I'd argue that right now is a like a land bank strategy, right? That's what I'm doing. That's the best strategy that I feel is positioned the best way for when the market turns. I'm buying properties that still cash flow. Maybe I'm not making money on it, but I consider myself a seasoned investor, but I'm buying properties that cash flow, that come with the ability to sever off additional lots to build ADUs on, so that in the event that the market shifts and it's on its upswing again, I have my builder's license, right? I have a development license. I could build on those severed pieces of land, sell them off if I want. Or if I don't even want to do that right now, the rental market is extremely hot, I'll develop for rental purposes, right? Or, for example, when the market's on an upswing, buy and flip. Like maybe flipping is the best route, because you can turn and burn properties really quick and make a good buck. So instead of focusing on diversification across
1,000 cities,
multiple cities and stuff which is risky. We're doing it with Coachwood Capital, but we're doing it very, very,
we're not doing it for diversification.
We're not doing it for diversity. Exactly.
We're analyzing markets specifically.
We're doing it very strategically.
Yeah.
Okay.
Like at no point have you said to me, "Oh, let's diversify in Florida and Phoenix and whatever." Right.
Yeah. Exactly.
It's where's the deal?
Yeah.
Let's investigate the market.
Yeah.
Does it make sense?
Exactly.
It's not about diversification.
So I like the idea of diversifying depending on what the market cycle is doing, not necessarily different locations.
Yeah.
Right?
I love what you said about banking land there. I think that's a fantastic strategy. Most people are not thinking about that.
No. But banking, banking land that will also cash flow. The golf course.
Yes.
Right? The golf course. I own property on the exactly. I own the property on the water.
Yeah.
That's a land bank play.
Yes.
Because I know that shit house that I have that's being rented is covering the costs, but eventually it's going to be a windfall when I develop that land.
And here's why it's going to be a windfall. You're seeing across the country, cities like Toronto's already talking about it. BC's already talking. They might have even already done it. They're eliminating zoning. Okay, so any R1 residential single family home, you can put a fourplex there. Okay?
Interesting.
That's inevitable.
Yeah.
Here in Ontario, all across Ontario, in my opinion, we're not there yet. We have the ability to put 3 units on a single family lot, but you can't put a fourplex. You can put a single family home with 2 ADUs.
Yeah.
But if you can build a fourplex there, guess what happens to the value of that land?
It's gonna skyrocket.
I saw something on Twitter, a 50 by 120 lot. They put 12 units on it. A purpose-built 12-unit. It was a nice building too.
That's what has to happen.
Yeah, they have no choice.
Yeah.
It's going to be all rental properties, and the people that own the land and or are building the rental units are going to be laughing, because guess what, folks? They're not going to be able to build affordable housing ever in this country. Okay,
it's not going to happen.
So if you are an average middle-class worker and you don't already own a home, you're going to be a lifelong renter.
Yeah,
I'm not championing this. I don't agree with it. But guess what, folks? You let in 1 million immigrants a year, 1 million new people into the country without a housing strategy. This is what's going to happen. Yeah. It's already too late.
You pump too much money in the market. It's going to happen.
Combined with mass money printing, which folks, it's always been money printing. Okay, COVID made it obvious. Yeah. To the average person, they exposed the game. It's always been 5 to 7% more money supply annually, compound forever. It's that's just the way it is. That's why prices continue to go up.
Consumer index.
Masked, hidden behind the 2% CPI that
hidden behind milk and bread.
And the middle class just continues to be like, I can't get ahead. They don't know why. They keep investing in diversified portfolios of ETFs. The rich they play a different game. They understand inflation. They understand that you have to own hard assets. You have to outpace inflation, and you have to use leverage. That's why the rich get richer. It's not because they're smarter than anybody else. It's because they're willing to financially educate themselves, right? Like financial education is so huge.
Really, they're
so
a little
huge.
bit. They look at risk a little differently.
Yes,
That's it. That's all I can say.
How risky is it to not use leverage in a levered society? Right, it's almost the opposite of what people think.
You see it, right? Like
Yes.
it's the majority of people that can't afford what they want to afford now. It's that person you're talking about.
Man, I'm dealing with buyers right now that are like, I've saved $150,000 over the past 3 years, and we're out looking for houses, and we're getting smoked.
Yeah.
And it's like, hey, 150,000, that must have been really hard to save. But guess what? Like, really, probably wasn't the right move. You should have bought a couple investment properties. Now you'd have a bunch of leverage. You would have, you'd have 400 to 500K now.
Yeah.
And
you
I don't
pull that out by your own. Yeah.
Yes, like now because you're not in the market, you're competing against people that are selling, right? And then taking the money and buying. So that's who your competition is, but you're not selling anything. You don't have any leverage. You didn't use leverage properly. So we're struggling, So, and this is happening across multiple price ranges as well.
Yeah.
So they thought they were being smart. They thought having the money in cash was a smart move.
Yeah. They also lost how much during the period of them saving that capital.
Their buying power
is just getting crushed.
Like, man, I always say this, and they always make fun of me, but like the value of the home hasn't gone up. The value of your money's gone down.
I agree with that. It's not me.
I know, but it's so like it's such like a nerdy thing to say in a way. But like the value of the house hasn't gone up. The value of your currency's gone down. It's not worth anything. It's not. It is, but it's not worth as much. It's gone. It's cut in half.
Yeah.
So everybody's looking at housing prices have exploded. No, your money's not worth anything anymore.
Yeah.
So you need a lot more of it. The problem is you tried to save. You can save 5 to 7% a year of your income, but prices are going up 17%, right? Or the value of your currency is devalued at, what do they print? 50% of the money supply ever
something stupid.
in 2 years.
Yeah.
So your savings just got destroyed.
Yeah.
Now your savings always being destroyed. It's just not at that obvious pace of 25% a year, or whatever it is.
Yeah.
So this is why you're in trouble. So what else was the rest of his argument? There's a couple other points.
The rest of the third argument for him was time management, or not even time management. It was time in general, right? Where he's saying that my time is basically more valuable to me, and rental properties will take a lot of that time away from me.
I don't agree.
Yeah, no, I don't agree either. Like what I just said, I haven't been to one. Honestly, at this point, the only reason why I'll ever even go to one of my rentals is to literally do a video for YouTube. Like that's literally, I'm not even joking. That's literally the only reason why I even have to go there anymore.
Yeah.
So now again, it didn't start that way. In the beginning, I did a lot of the work myself. I would manage it myself in the beginning. So it didn't start that way, but I also didn't have a job, or I was starting Canadian Protein and I didn't have the money to hire property managers, right? So if this guy, like what he's talking about, is increasing his earning power with his current employment while still not wanting to hire a property manager, well then, it's going to take your time. But if you have a job and you don't need that extra $100 a month to, buy food, which, I was arguably in that kind of position where I didn't have the money to, I needed the extra dollars for what I was doing. If this guy isn't in that kind of position, which he's not, and that's the argument that he's in, well then why don't you just hire a property manager? 5 to 10%, of your annual earnings, and it goes
this is
to
a great
property
point.
manager.
Actually, I haven't thought about this.
It doesn't make any sense. Now there's some arguments for me. If you really want to actually make a career out of real estate investing, I think it is important for you to manage your properties at the start, because you need a feel for how things work. You need real life experience so that you don't get taken for a ride by property managers, because you very well might. I can't tell you how many times. This is a perfect example. When I went over to Canton Manor, okay, they had quoted me $166,000 to tuck point the entire building because there was water penetration coming into the building, and this construction company said, we need to take care of it immediately. I went over there. Within 5 to 10 minutes, I realized that it wasn't a tuck pointing issue. It was the caulking for the P-TEC units, which are AC units that go through the wall, had pulled away from the brick facade and was running back inside of the wall, down the AC unit, like inside the wall, down to the unit below, and was causing water issues. Guess what the quote now is?
The whole wrong diagnosis.
$4,000 to fix that. So we're talking about $162,000 difference by me having some sort of experience and the ability to see and realize that, hey, listen, like I need to get into this situation to not have someone take me for a ride, because this will happen. Whether or not that's the case is a different story, but I fired that property manager. I'm working with a different property manager. Nice. And that played a big role in it.
Nice.
Because for that person not to be able to see that was the real issue in that property is a major red flag for me. And that tells me that you don't have the proper experience to manage a large-scale 56-unit apartment building. Mm-hmm. That's a big fucking issue. Yeah. So, and I would advise, if you have big issues that come up or big expenses come up, you should go there personally to qualify that issue before you fork out any money. And the experience of managing the property at the beginning will help you do that. Now, absolutely. I'm not saying you have to do that, though. If your time is more important than spending a couple extra $1,000 not or misdiagnosing an issue or letting someone else diagnose it for you, well, that's different.
Yeah.
You're still going to make a return, I would argue.
Yeah. For the beginner out there, you're not hiring a property management company for a 55-unit apartment building, right? No. You're starting out with one rental property, and we recommend
different. Yeah.
We recommend that you manage that yourself to start, even if you can afford to pay, because you need the experience for the future.
Yeah, again, if your goal is to scale your portfolio, if your goal is not to really scale your portfolio, and maybe even if it is, but if your goal is to still keep your job, earn more income at your job, like this guy right here, and you want to have time, well, then it's property manager.
Yeah. Now let's break down also what he said, which is we don't know his story, right? Is he a high income earner? Does he have a business?
I honestly don't even know.
Right, but let's say that he's just an average wage earner or employee of some company, whatever. I know in some cases you can double your income. A lot of times you're not getting double your income. You might get a 5% raise a year or 7%.
Now I want to get into this because it's important. The reason why people won't be able to do that is because they lack the ability to understand that the more value I offer the business that I work for, the more I'm going to get compensated for.
Some businesses, though, not every business. You can work your ass off and not get a dime more.
I agree. A lot of businesses like that in the unions. You're capped, stuff like that. Like, forget it. But what I see it in my business. I will compensate employees based off of their merit and based off of the value that they present to the business. Okay, and I've seen personally, I've paid people personally when they've started out minimum wage, they're earning 3, 4, even in some cases 5 times the amount of money that they first started with because of the value that they offer the business. I think that's the highest leverage that you could ever get, is increasing the value that you offer to the place of employment that you're currently working at.
I agree.
Yeah.
Or if they're not respecting your efforts, then you have to go start your own business or go somewhere where they are. You have to.
You have to leave. But a smart, let me finish it with this. But a smart business owner will realize that. And at the end of the day, if you're difficult to replace, you can command a higher compensation.
I agree.
End of story.
And
but there's always going to be a ceiling.
This.
Yeah, and I fully recommend it. There's always going to be a ceiling, but that's what I recommend. Anyways, moving on from that though is...
Well, if you're... That's the thing, right? If you're working for the government, you're only getting... You can't really increase your earnings power that much. Yeah. If you're working for a great business that understands, work... That we recommend business. Work your ass off to get as much money as you can.
Yeah.
But the problem is you still have to put that money to work properly, or you're always going to be a wage slave.
Yeah.
And doing it in covered call ETFs, I'd love to see the average annual returns on these covered call ETFs. I'm guessing it's not more than 10% a year.
Well, like even the average historical return in the stock market is 10%.
Right. Yeah. So that's the max.
10 point something or whatever.
That's the max you can earn there.
Yeah.
And we talked about with real estate, even a 2% rise in real estate prices is equal to a 10% return on your investment.
Yeah.
And this is another thing we didn't talk about. At some point within, let's call it 2 to 10 years, you're going to be able to pull your equity out with a cash out refinance or HELOC. and then you can take that money and put that to work.
Yeah.
Good luck scaling your ETF portfolio. How you gonna leverage your portfolio?
Yeah.
Like, there's probably ways to do it, but I'm telling you right now, it's going to be way more risky than real estate.
For sure.
You can end up with infinite returns on real estate. So we recommend using leverage intelligently.
Of course.
Whatever you buy, you should be able to service the debt when it closes, right?
Yeah.
For pre-construction stuff. And
where are you seeing people getting hurt with like pre-construction stuff?
Oh,
Like,
I don't see it. I just hear about it in Toronto and stuff. I don't see it here locally really at all.
Okay.
Because our condo pre-construction stuff isn't that expensive.
Yeah, I got you. Yeah.
But in Toronto, where it's $950K for a 2-bed apartment, that would be cash flow negative $2,000 a month.
Are these people not locking in pricing? Like, is that what's going on?
They're buying it with the intention of just flipping it for more money, right?
Okay.
So the government's they've put in anti-assignment clauses. Now, that used to be a capital. It might have been a capital gain before.
Yeah.
Now it's 100% tax. Same with flipping, by the way. There's a flipping legislation as well.
Yeah.
If you flip a house now, it used to be 50% capital gains tax, right, on the profit. Now it's 100%.
15?
50.
50. Okay.
Right. It's a capital gain is 50% of 50%.
For sure. Yeah.
Now it's 100% is taxable income.
Yeah.
If you sell any property, even if it's your own personal residence, within a year. You get a flipping tax.
Yeah, for sure.
So it goes on to your income.
Yeah.
So they're trying to prevent that and condo flipping and stuff like that. Which,
Makes sense.
Which I understand, but here's the problem with that. A lot of those investors are what got projects off the ground.
I totally
It's
agree.
like everything.
I was literally going to say that.
It's so messed up. The whole system is messed up.
So what's that going to do? It's going to restrict housing.
They're just not going to buy them anymore. The condos won't get built.
Yeah.
Because the bank won't lend them the money unless X amount of units are sold.
Yeah.
And then we're back to square one, which is higher rents, higher resale prices for the stuff that's already built, and the problem's never fixed.
Yeah, and the government's not going to stop the floodgates from flowing in here with immigration.
No.
They can't do that, because if they do that, they're bigots, right?
They're bigots. They do it probably also to up the GDP, hide inflation, stuff like that, enter more people into the labor force.
Yeah.
A lot of people argue that they're actually using and abusing immigrants. If you look at it from a different angle, they're using to hide a lot of flaws in the system.
Yeah, for sure. I would agree.
And maybe the immigrants say, well, it's worth it because X, Y, and Z is going on in my country or something, and it's better here. But there are some debates about that. Don't really care to get political. We don't really argue it. I think politics is. I thought of this quote the other day. Politics is theater for the middle class. Like the middle class gets so caught up in these debates and transgenderism, this and this government.
It's like a
smoke
screen.
Government.
It's a smoke screen.
It's like watching a soap opera.
Yeah,
and
it really
keeps
is.
The middle class entertained and arguing about the wrong things. Well, the rich, right? Like, I'm aware of what's going on politically. It doesn't really tie me up anymore. I'm like, I pay attention to the monetary system.
Yeah.
And I educate myself financially so I can go and okay, shoot, they're bringing 1 million people a year. How do I hedge my risk here